Welcome to the Cryptosphere. This is Cryptogenic coming at you. Today is Wednesday, June 23rd at 11:57 a.m. here in sunny California. We're going to take a look at the crypto market today, and specifically we're going to begin with this Bitcoin chart. The question that I want to deal with today is, what is the death cross? What is a death cross, and what does it mean for the crypto market? Does this mean that we are entering into a bear market? Or can the bull run survive a death cross? Now let's look at this chart. First of all, what is a death cross? Well, the death cross is happening right here as we speak, and what a death cross literally is when this 50-day exponential moving average breaks down beneath this 200-day exponential moving average. And typically, in technical analysis, there's the belief that these exponential moving averages, when they cross, they mean something. They foretell something. Well, in order to kind of get a picture, a feel for what this death cross actually means for the Bitcoin chart, we've actually got to go back in time a little bit and examine what happened the last several times there have been death crosses. And I've actually charted out all of the death crosses going all the way back to 2014, and I want to show you what I found. This death cross happened on March 14th, 2020, and it signified, well, it did not signify, it's interesting, it's a 54% drop, for Bitcoin. However, if you look at this, by the time the death cross happened, the drop had already transpired. So Bitcoin had already fallen. I mean, from here, before the death cross happened, Bitcoin had already dropped 54% below the 200-day EMA, and the death cross happened after the drop. So in actuality, all the death cross did here was tell us what had already happened, kind of foreshadowed what had already happened. And in actuality, the recovery from that drop actually started the bull run that has taken us to today. The previous death cross happened here on November 27, 2019, and there had already been, prior to that death cross, a 24% drop from that line for Bitcoin. And actually, if you go back to its high up here, it was already a 36% drop. But if we go from the moment of the death cross, if you see, actually, let's see. No, I mean, it was already down at the time of the death cross. It was already down 20%. And the next candle, the next day, it went down another 4.25%. So once again, the death cross did not precipitate any further drop. Pretty much, it simply told us what had already happened. Actually, I take that back. If we go over to this candle over here, it went down to 25.68%, basically. Yeah, 25.5%. So really it was only about a 5% differential between before the death cross and after the death cross. All right, we had another death cross over here. This one was pretty substantial. And there was a total 64.53% drop from that death cross. But actually, at the time of the death cross, we were already down 27%. So the death cross took us down another 38%, 37%, something like that. So this one was a substantial drop. And this death cross actually happens in the midst of a bear market. All right, so you had a bear market going on here, and that death cross transpires in the midst of the bear market. A total 84%. It's just the last 64% of it happened after the death cross. Then we have another death cross here that transpired on August 26th of 2014. And we had already dropped a little bit, but sure enough, we went down 72% after that death cross. This one was a 36% drop. However, you notice the death cross happens after the drop had already transpired, and so we were actually already in recovery by the time the death cross happens here. So if you take that into account, you've got 1, 2, See if we can count this. 3, 4, 5. And this is our 6th death cross since 2014. And out of those 6 death crosses, 2 of them basically indicated a deep and continuing bear market. But both of those 2, this one and this one, both of those 2 transpired within bear markets. So you see that this bear market was already in progress. Same thing with here. This bear market was already in progress. So what I'm finding is that when a death cross transpires in the midst of a bear market, it can indicate a deeper fall. But when it happens outside of a bear market, the consequences of it as such are not necessarily so deep and abiding. So which is it going to be for this particular death cross? Well, only time will tell, but the one thing I can say is that if you look at what's happened here with the price action, from the line, Bitcoin had already dropped 25.42% before the death cross. So it could be that this death cross is simply indicative of what's already transpired with Bitcoin, and that this is not going to indicate a deeper and abiding bear market. That's what I'm believing, but of course only time will tell. If we do have a deeper correction and a longer, more extended bear market, well, we're gonna find ways to profit from that as well. It will simply be a deeper accumulation phase, but I'm just not anticipating that. Now I want to go a little deeper into what's actually happened. Now you guys know I do not like short-term charts. I mean, if you watch my channel, typically I'm looking at daily charts or I'm looking at weekly charts. I don't like looking at shorter term. However, I'm going to look at the 1-hour chart here for Bitcoin because I want to take a look at kind of the structure of this recovery and see what this looks like. Actually, I'm just going to forget the RSI for a second, forget the MACDs. This looks like a V-bottom recovery here, okay? It looks like we're just V-bottoming out of here. Secondly, if you look at what's happened with this V-bottom, a couple things happened. You had a bull flag here, or a bull pennant, you could say. And then we broke bullish out of that bull pennant. And now the question is, what is this? So this could be another bull pennant or a bull flag. Or it could be that this was a bear flag that we've broken bearish out of. And so the question is, what does this indicate and what's the direction next? So if this is a bear flag that we've broken down out of, we should expect a dip of about 2.54%, okay? 2.54% basically takes us down to where we've already dropped. So in other words, we've already hit the bearish target for this, if this is a bear flag. So that means we have to kind of keep an eye on it to see what happens next. However, if this is a bull pennant and it signifies recovery, then we should expect to bounce around in here until we bounce out of here and go bullish. And so we can expect about 2.64% above. So if we break above the line right here, 2.64%, and that should take us up to 35,000. Actually, that's not correct because we're already here. So we would have to break above the line either in the next hour or the next hour. But if we go out a few hours, and let's say we break above the line here. Why isn't this working for me? 2.64%. actually takes us up to 35,711. And then if we zoom back out to the daily to take a look at where that takes us, if this is truly a bear pennant, that's going to take us back into this trend and back up testing the top of this trend. And so if truly we're going to test the top of this trend and even break out bullish above the trend, if we're able to break bullish above this trend here, then what that spells for us is about another 44% pop. So we'll be looking at basically a chain reaction. A chain reaction if this is legit, and a 44% pop above this will take us above both moving averages up to about 51,000. 43%, sorry. 43.86. That's as precise as I can get it. Up to about 51,600. So those are the possibilities, folks. If we break bullish out of this, we can get up to 35,700. And if we can break bullish above this trend line here, we could break up to 51,678. That's a possibility. However, if we, going back to the 1 hour chart, the bearish scenario is that if we break down below this line and this line becomes resistance, we could look at another 2.5% drop below this line, which basically takes us back down to 32, and then we'll have to kind of reconfigure, look at the charts once again to try to figure out where we are and where we are going next. My anticipation, however, is that there's a good chance we're in recovery. I think there's a good chance we're just going to V-bottom out of here. And if we're going to V-bottom out of here, it's not going to be without turbulence. It's not going to be without volatility. It'll probably be somewhat slow over the next few weeks. I like what Digital Dave said. Digital Dave said, in July, expect fireworks. I think that's a good word. I'm expecting some fireworks in July. So I say all that to say, yes, the Death Cross is happening right here. It's happening before our very eyes. There's probably going to be a lot of media coverage. There's already been some media coverage on the Death Cross. People are already talking about it. There's probably going to be a lot more if it's confirmed and it breaks down fully underneath. I'm not going to worry about that. I'm not going to see more in that than is there. I don't believe we're in an extended bear market. I believe the market's going to pump. And once we hit these targets, we will reevaluate and we will see what the next step is. All right, folks, that's all I got for you today. Do me a favor and smash that like button if you like this content. Smash that subscribe button as well. Leave me a comment if you liked what I offered and what I provided today. And remember that this is not financial advice. I'm not a financial advisor. This is simply a hobby of mine that I enjoy, and everything that I say is my opinion and my opinion only. Also, make it your aim to sleep in peace every night, wake in joy every morning, walk in love every day. And with that being said, this is Cryptogenic signing out.